Alright guys, welcome back to another Wise Wealth. Today we're going over, last video we went over bubbles and how they're detrimental. So today we're going over safe haven assets, which is essentially how you could protect yourself against, a bubble or a downturn. So what are safe haven assets? Well, they're a type of investment that is expected to retain or increase in value during times of uncertain market action. So we have, such as you could have like political tension, you could have a war, you could have disease, you could have natural disasters, really anything that could downturn the market. And like I said, it offers protection against down markets, and it's a very good way to diversify and hedge your investments. What are some examples? So for the first safe haven asset, we got gold. And this because throughout history, gold has been the standard of trade, and it's known to retain and increase value because of how rare it is and how hard it is to obtain. It essentially serves as a form of insurance against market wariness. And when there's a high inflation threat, usually the price of gold goes up because it's priced in US dollars. And obviously here you can just see 1 ounce gold bars, which actually, guys, Costco does sell 1 ounce gold bars. I learned that a couple weeks ago. I did not know that the Costco sold that. And I think they sell platinum bars now also. Or you could also invest in some gold jewelry. I wear gold jewelry. It's a good investment because you could just, obviously, when you pay for the jewelry, you're going to lose some money, but it's still a good way to retain some value, most of the value, because you could just, if you ever have to, you could just take the jewelry and melt it down into gold. But for the next example, we have treasury bills, or more commonly known as T-bills, which are debt securities that are backed by the U.S. government. And they're usually seen as risk-free because whatever principal you invest is repaid by the government at the time of the maturity date. And obviously you can buy bills in different maturity dates. You could get 4 weeks, you could get 3 months, you could get 1 year, you could get however long you want. And this is what a T-bill looks like. T-bills are not the same as bonds, so don't get that confused. The third example we have is cash, just simple cash, like, your dollar bills. And honestly, this is considered the only true safe haven asset because if you have actual physical cash, you can't lose it, right? So, like, say you put money into a stock market and the stock goes down, you're going to lose money. You can't lose your cash. However, the cash can be affected by inflation. If inflation is very high, the purchasing power of cash is obviously going to decrease. But it's still a good safe haven asset to have. And we all know what cash looks like. And our last example is currencies. So what's the main safe haven currency? We got the Swiss franc. Why? Because Switzerland has, throughout history, had a very strong government and a financial system. And the Swiss franc usually faces very strong upward pressure from foreign demand. Why? Like I said, because they have a very stable and secure banking industry. They have certain regulations and rules because they're independent from the European Union. And it's a tax haven where the ultra rich put their money because their banking system has extremely high security and anonymity banking features. Then another example of a safe haven currency, not as much as the Swiss franc, but we got the US dollar and the Japanese yen. That's what the yen looks like, and this is what the Swiss franc looks like. So now you don't have to, in order, if you want to invest in the safe haven asset of currencies, you don't actually have to go to Switzerland and exchange your US dollars for currency. One, you can either trade it on a Forex market, which require different brokers, which have certain spreads, and it's very complicated. But the easiest way I would say to invest in a foreign currency is just buy foreign currency ETF. I actually have some Swiss franc foreign currency ETFs, hedge my portfolio. But yeah, you don't actually have to exchange in your USD to receive foreign currency. You could just either do it through a Forex broker or through ETFs. Now, overall, what do we learn? Safe haven assets, although they're very good investments, they're not guaranteed to keep your money safe. As when you put your money in the stock market, it's not guaranteed. Nothing is guaranteed, but it's still a good way to hedge against economic uncertainty. Great way to diversify your portfolio. However, safe haven assets are still affected by inflation, but probably not as much as other assets. They're definitely lower risk, and although they might provide lower returns compared to like growth stocks or options trading or whatever, they're definitely lower risk. So it would be a very smart choice to engage in safe haven investing for at least some of your portfolio. I think in my portfolio, I have maybe like 30% is safe haven assets, and a majority of the other 70% is in growth stocks and dividend stocks. But yeah, it's a very smart choice to put some of your money at least into safe haven assets, just in case. You never know what happens. Obviously, right now we have an election coming up. We have tension all over the world. We've had some hurricanes, but you get what I'm saying. It's a very smart choice to keep your options open. But yeah, that's basically it. That's what safe haven assets are. Now we basically covered all the investment categories in Wise Wealth. We covered derivatives, futures, options, safe haven assets, growth stocks, value stocks, whatever. We've covered all that. Now, I think I'm going to start doing Wise Wealth videos on how the economy works, inflation, interest rates, Fed, banking, all that. Because that is extremely useful and you should most definitely know how that works. So, yeah, thank you guys for watching. Stay tuned for the next video.